I'm Wesley Rothwell, Chief Commercial Officer with a responsibility for the land portfolio, which includes identifying investment opportunities for the business within the segments which Stephen has mentioned. As previously mentioned, the team has deployed over 700 million on land acquisition, and equally importantly, during that period, we've reviewed over 2 billion of assets, which we haven't pursued for a variety of reasons. To put this into context, for every 10 to 12 assets which we review, we would actively engage on 1 or 2. Later, I'll take you through a detailed overview of the processes and procedures which we adopt in identifying, reviewing and acquiring lands. So looking at the segments, the investment team is focused on these 3 segments of the land market, namely suburban, urban and partnerships. Investing across these 3 segments allows us to optimise the return profile of our investment and utilising the group's construction expertise. So firstly, looking at suburban. If we consider the suburban and urban markets in 2019, in excess of 1.2 billion of land traded in the year, which is consistent with 2018. And we will anticipate a similar volume to trade in 2020. We're sourcing the majority of our opportunities off market, and we're seeing a steady flow of opportunities on market as well as off market. And again, we expect this to be consistent throughout this year and into next year. The profile of purchaser has evolved, however, over the past 4 to 5 years, from opportunistic high net worth investors and developers to developers funded by PE funds to a more tiered structure in 2020, where we're now seeing limited demand for opportunities in excess of 10 million, with smaller family offices focused on the sub 4 to 5 million market. And again, we expect this trend to continue, as mentioned by Stephen. There are multiple exit options in the suburban market, focused on owner-occupier, social housing, and a newly evolved trend of institutional investors looking at the suburban sector, as Conor has alluded to. So looking at the urban market, there's no doubt that during 2018 and 19 we experienced competition for urban sites, which were a focus for the PRS sector, and we expect this to continue. The profile of bidder included investment funds, local specialist operators and developers partnering with international capital. We have the opinion that there's a significant amount of these assets that have traded over the past 2 years may not be delivered, and an opportunity may present itself over the next 12 to 18 months to use the advantage of the PLC covenant to extract value from these assets. So for example, working with the landowner on a JV or a structured deal. So turning now to partnerships. We're currently involved, as Stephen has mentioned, in a number of active processes, which we expect will be awarded during 2020. We believe that as the land market continues to evolve over the next 2 to 3 years, that the partnerships will grow in significance. And this has been driven by state entities such as local authorities, semi-state entities, and the newly formed Land Development Agency. And I'll bring you through shortly some more detail in terms of the potential pipeline that's in the partnership sector. Each of these 3 sectors are important to us here in Glenveagh. And while there are nuances in each of them, the ability of the business to maximise a return on capital by reducing our investment in land will grow output. So looking at our portfolio, over the course of the past 2.5 years, we've assembled an excellent portfolio of land, which falls within the 3 segments. Our portfolio is essentially Dublin-centric, 90% in the Greater Dublin area, with a particular focus on the deepest segment of the residential market, namely the starter home, sub 325,000. In addition to affordability, we placed a significant emphasis upon transportation hubs and employment. And this is further demonstrated with 69% of our portfolio in the suburban locations. As I've mentioned, and as we've previously discussed, we're focused on assets which have multiple exit options, which is demonstrated with 15% of our portfolio having either a private or a PRS exit, and we expect this trend to continue as the investor continues to enter the market. So a fundamental driver in assembling our portfolio to date has been our focus on the deepest segment of the residential market, the starter home, combined with affordability. We're continuing to experience population growth, particularly in the main urban centres, which are a focus for Glenveagh moving forward on future acquisitions. We have the opinion that the demand, coupled with projected population growth, that the starter home market has the greatest potential for HPI. So an important part of our portfolio assembly to date has been our focus on the market in Cork. Designated Ireland's second city, 2 hours by car and train from Dublin, an international airport, an extremely young and dynamic population, and a significant emphasis upon pharma and IT. If you Google why I live in Cork, you'll find the following: an attractive jobs market, the cost of living, the way of life, and the culture. These points demonstrate why Cork has been such an important market for us in Glenveagh. We've assembled a portfolio of 5 assets which have the potential to accommodate in excess of 2,100 plots, focused on both the build-to-sell and the PRS sector. While this comprises in excess of 14% of our land bank, the average plot price is extremely attractive. We believe there's a significant opportunity for us in Glenveagh to become the dominant house builder in Ireland's second city. So I've mentioned the pipeline in the partnerships area. So this, in addition to the traditional options of procuring land on and off market, we see partnerships as being accretive to the business, as it offers alternative delivery options, it complements our existing land bank, and it contributes to the key financial metrics of our business. Partnerships have been a feature of the UK market over the past 10 years and have been adopted by such entities as Countryside. The existing pipeline of opportunities is strong, and we anticipate that this will grow, as we've alluded to, over the next 12 to 24 months, as the government encourages mixed tenure opportunities and exits by state entities. As I've mentioned, we're at the advanced stages in 2 processes, and we expect these to be awarded during 2020. So we're continuing to see a strong volume of opportunity on and off market in each of the segments of our business, and we expect this to continue. And I think a key focus for us in the investment team is to really assure the following: the profile of asset that we're looking for, that the location fits the acquisition criteria of our business, that the asset offers multiple exit options, that the asset meets the key metrics of our business in terms of margin and ROCE, which have been discussed today, and the capital allocation in particular geographical locations. So if we delve a little bit deeper into this, what we've done is we've created essentially 4 categories in our land market and a sector when we're looking at opportunities. The first of those, or the first 2, category 1 and 2, have been a particular focus of the business to date in terms of identifying, in the case of category 1, assets that have full planning permission, whereby we can deliver units within a maximum of 14 months. The second are lands which are zoned with fully serviced, where we hand it to our planning team and we bring it through the planning process, and we can deliver units within a 30-month period. The additions to that now are focused on the category 3 and 4. So category 3 is a hybrid of 1 and 2, and it's based upon phased payments linked to a phased drawdown of the lands. There are obvious benefits to us as business in terms of our ROCE and our deployment of capital. It is important to realise, while this is a concept which hasn't existed to date this is a concept which has existed in the UK, it's something that hasn't existed in Ireland. And therefore, it's important for our ability to utilise the strength of the PLC to extract these opportunities in the market. So turning to category 4, these are strategic long-term acquisitions, and these are focused on areas where the potential rezonings of land in time in a period of 4 or 5 years. Again, if we can procure one of these assets, there's obvious benefits in terms of the advantage and the underlying land value. So I suppose we've a disciplined approach to land acquisition and selection, and really we've broken that down into 3 key steps. I suppose the first of those is identifying the key area. So with a focus on employment, demographics, transport, schools, absorption levels, all of those things as being key components to selecting the area and why you should go into it. The second, once we've identified the area, we focus on who are the owners. So we sit down as a team and we say, right, who are the owners of this land in this particular location? And I suppose what that allows us to do is be strategic in our approach in terms of who we're targeting, how we're targeting them. And again, we're ahead of the posse on that front. I suppose the third is, once we've identified the location and we've identified the lands and we're engaged regarding a potential acquisition, the investment team, in conjunction with the internal teams within Glenveagh, prepared a detailed assessment of that asset. Once we've done that and we believe it's an asset that we want to advance on, we at that point engage with external consultants, so architects, planning consultants, surveyors, engineers, solicitors, etc. And at all stages in this process, we regard to the key financial metrics which we've alluded to today, and equally importantly is the delivery matrix. So while I've briefly outlined the forensic approach which we follow in acquiring lands, it is important to realise that at all stages in this process, it's not just the investment team that are reviewing these opportunities. We're fully supported by the overall business. So, and the planning team, our infrastructure team, our procurement team, our QS team, construction, sales, finance, etc. And that's extremely important to us on the acquisition side of the business. So as part of this engagement with the internal teams, we obviously we've internal and external processes around that, and we have pre and post acquisition meetings and reviewing of assets. And again, this is a critical part of the process which we go through in procuring our lands. So in addition to these meetings, and once we've identified an asset and it's been brought in, our team would then obviously support the other parts of the business in terms of the construction team, the sales team, and the planning teams. So I could leave you today just with 3 key messages from the investment team. We're seeing a volume of opportunity, and we have a disciplined approach targeting the 3 segments. We have a quantum of capital whereby we're focused on particular locations and particularly on the first unit delivery, and the importance of multiple exit options.